Hey, welcome to the 40 Finance channel, everybody. My name is Jeff Beers. Today on this Stock Market Live, we're going to be looking for buyers in the stock market. We've obviously had plenty of sellers here lately, but the fact of the matter is, despite valuations and multiples coming down significantly over the past few months, we still haven't seen the buyers come in. And that buyer that matters is usually not you and I, but it's the big institutional buyers, as well as hedge funds and so forth. And of course, a lot of those are crowded into the oil stocks right now and holding cash. So what's it going to take for some of this to flip around and not necessarily get back to all-time highs? I don't think anyone's expecting all-time highs here in the short term, but what's it going to take, just to get stuff back into gear? And so that's what we're going to talk about here today. Actually, ironically enough, if you look here on Seeking Alpha, you have a small uptick today, and we had a nice uptick yesterday in the NASDAQ. Today, you're plus 7.6%. And if we break that out on a 5-day, you're actually up even more. You see the little steps here coming up from, let's just call it 10,700 up to, 11,200 or so, depending on when you look at it. So that's a nice little tick up, but it really doesn't solve the greater problem, which obviously is probably going to take time. But you have to wonder how much the oil prices are coming into play here. Obviously, President Biden, if you're not familiar, he might be live right now, but he's talking about an oil tax holiday. I believe it was for 3 months, but that still doesn't really solve the problem, but obviously it is putting a little bit of pressure on oil prices. We'll have to dig in and see what other things he'll say here in a little bit once they've kind of combed through the news conference, gotten through all the questions, see if he has any plans for the future. But, anytime oil is going to come down, even just a little bit, which right now at 106, it looks like we're back to, give or take, mid-May. All right, so mid-May, off the spike. Who knows if it keeps going down? That's really hard to tell. But you're going to need more than a tax holiday to make the actual price of oil go down. The tax holiday will help those of us here in the United States. It'll take a couple cents off each gallon. Of course, it's the old, stimulus type thing where you're trying to go directly to the source of the consumer's pain, and you're not necessarily fixing the core problem. But that's a topic for another day. So let's look around here at some of the big calls that I've seen come through here on Seeking Alpha over the past 24 hours. So the first one, from a consumer standpoint / inflation standpoint, Boston Beer cut to neutral as hard seltzer sales slip. Now, this was a problem prior to the recession, as their numbers for the hard seltzer did not come in as expected, particularly in Q4. But now you have folks talking about it even more. And to me, this is counterintuitive to sort of the consumer staples. I don't know if this is a consumer staple or not, but it does sort of beg the question, why are these things still slipping? They say earlier this year, we believe Truly volumes would return to modest growth as they lap incredibly tough 2021 comps. Channel mix normalized. We were wrong. This is likely due to the unsustainable cycle of flavor innovation and the growth of spirits. And this comes from an analyst. While she was incredibly optimistic about Twisted Tea as a rare gem, the prospects for a guidance cut and continued uncertainty in Truly sales are enough reason to head to the sidelines. Indeed, charts suggest that there's going to be a dip in shares akin to what was seen after the boom in craft and cider demand. So I do think beverage, spirits, beer is a very interesting market heading into a recession because obviously the world shifted to different types of drinks, particularly craft beer, seltzer, and you have to wonder if there is a recession or if wallets get pinched, how much of the traditional beer, say Budweiser, Coors Light, all those names, how much do they come back into play? I would imagine, given the employment situation, that it probably won't change a whole heck of a lot. But comping 2021 is going to be tough for anybody. All right, Derek Ridland's here. Sam has a zillion competitors right now. This is very true. And Derek brings up a good point. There was a time when this Truly and White Claw, I believe, which is private, Truly and White Claw were the only seltzers on the block. And then like all things in consumer products, there's no secret formula that your competitors won't go out and try to mimic. And I know I used to have Coors Light tap stock. I actually sold it in the spring as it reached, it wasn't an all-time high, but it reached back from the depths. And so I took that cash and they jumped in across numerous brands. And you think about the Budweiser and how many brands they have with Natural Light, Bud Light, all the things. So here we are. Sam, a phenomenal story during the pandemic, is now slipping quite a bit if we look at the 1-year chart. And this is basically 6/24 of 2021. Things are going great. And then unfortunately, if you were in at that time, you're down to 310, so minus 70%. All right, let's take a look at what else is getting called. Bed Bath & Beyond, I'm not really worried about that. That doesn't really affect me a whole lot. This is kind of interesting from a consumer standpoint. So American Outdoor Brands and Six Flags, which is a amusement park chain, they get downgraded, but let's see what that downgrade is. Headline these changes: America Outdoor Brands was cut from buy to neutral as recession risks build. Potential for guidance cuts come to bear, blah, blah, blah. Concentration of sales in firearm-related products impacts forecasts. We continue to believe increased level of outdoor activity in recent years are going to continue, especially if they can be done at low cost. Unfortunately, with American brands, outdoor brands product mix not benefiting from any penetration in consumables, the company is dependent on the sale of basically the same stuff that they sold in 2021. Now, I'm more interested in Six Flags because if we think about Disney for a second, I would expect this to be a huge year for theme parks. And as a matter of fact, we live in Cincinnati. There's a huge theme park called Kings Island here. And, my daughter has a membership to it, or a pass, because we live close enough that you can go to it frequently. Six Flags fielded a downgrade from Wold as he indicated attendance declines and reduced in-park spending are likely to weigh on shares. While the stock sell-off may have priced in a good degree of downside, full risks of a recession are not yet reflected. In another parallel price cut, SeaWorld price targets were reined in from 94 to 76 as attendance is expected to fall as well. This to me is super surprising, okay, that these destinations are calling for attendance to fall. Cedar Fair also saw a notable price target cut from 80 to 68 while a buy rating was maintained. Now, I don't know where they get this information, and I'm not going to suggest that the information is wrong. However, we did see huge travel stocks go down this week, seemingly strange to me because I don't know that the story has changed any about what people are doing this summer. I think at this point it's fear for next year because, of course, the market's always looking ahead. But if we look, let's just take Expedia just for fun. I'm going to go into the momentum. Actually, I wanted to check on earnings estimates. And what do we have? Where's the place? I need to find the place where they talk about up and down revisions. Here we go. So revisions grade for Expedia for this fiscal year in the last 90 days, 48% up, 48% down. Sector median is 66% down in terms of upgrades and downgrades. Let's see. Now, Expedia, I don't know how backward it's worth looking at because they just got absolutely destroyed in the pandemic from the standpoint of obviously low bookings. And then this is a company that does have a little bit of debt to it, so you have to watch that. Their last quarter, minus 47 cents. They beat it by a penny, but they did miss on revenue. So that's Expedia. Let's take a look at like a Marriott, who I haven't looked at in a while, and I'm obviously spelling it wrong. M-A-R, oh, 2 R's. All right, so they're down 3%. Their revisions are up. Okay, 17 up, and I'm just picking Marriott out of a hat. Instead of going with a booking company, I'm looking at a hotel company. Revisions are down in only one instance, at least on this one. And then last quarter, they beat by 33 cents. Revenue just barely missed 30 million, but that's on a total of 4.20 billion. So Marriott, despite the upgrades, I do believe, yeah, they have been coming down. And you see this across airlines. We showed Expedia. We talked about Six Flags and that stuff. I think Disney continues to fall. I don't want to say that without looking. It's plus 1% today, but over the past month, it certainly hit a flat line. Somewhere in the neighborhood before Memorial Day, you're at 105, and now you're at 94. So these negative commentaries that continue to come in and these negative projections are going to make it very hard to circle up some buyers in this environment for anything but gas and energy stocks. And I think, in my opinion, there's a psychological barrier that we have in the market right now. There's the obvious barrier of declining earnings, declining revenue, etc. However, when the news every day, let's see what the trending news is today. When the news every day is about downgrades and guidance and everything else, here we go. So Juul lost some sort of lawsuit or something today. They got their products banned for something. I can't remember what it is, but that's not the kind of news I'm looking for. I'm looking for this. JP Morgan to lay off hundreds as mortgage rates climb. Now, that is seen apparently as a negative, depending on how the rest of the financial sector goes. But can I be real honest with you? In terms of a guy like me who owns Rocket stock, the layoff side of things from an earnings standpoint is actually good. So I would imagine Rocket, without knowing for sure, imagine they got layoffs coming out the wazoo. And that's actually good news if you're worried about EPS, like I look at. See if we can find anything about layoffs. Squelching loan demand. I don't see anything specifically about Rocket and layoffs, but you know it's coming. You know it's coming. But some layoffs are not bad, okay? Like we've heard about Amazon and what they're doing with their warehouse space, trimming down warehouse space, subleasing it, etc. That's looked at as a key negative, but it's not necessarily a key negative when you think about profits, All right, and I know that sales is a shiny object, and failing to lap sales could be a problem for any stock. But when it comes to profitability, it can help. Layoffs help. Subleasing warehouse space helps. Selling off equipment that you don't need when you're at partial capacity, it actually makes a difference. So if we take a look at estimates, I don't know if we're going to see this in Amazon, but fiscal quarter 2, which ends here in June, 17-cent estimate, that's a negative growth. And so is Q4, at least right now. But the rest of these, despite how many analysts we got here? Let's just stop here where you got about 12, and we don't know how often these were updated. But you can see that, don't forget, Amazon did a stock split, so some of these EPS numbers are weird. You have the potential to get back to a higher EPS level by making the appropriate cuts. And those cuts aren't necessarily good for the American worker, but if we're talking about stock market here, right? And if you're talking about the stock market, they can be good when it comes down to profits. All right. Lion's asking for help from Papa Pal. He is not helping today. I'm sure that you've already seen it. Let me flip over here. Here's the help you got today, Lion. Powell tells Congress the Fed is committed on inflation, notes that a recession is a possibility. So he needs to climb back in the hole. And what else did we do? Lion, you sold CNI and you bought Meta. Did you see that Zuckerberg is going to be on Mad Money of all things? I can't remember when that is. So you sold Canadian National Railway. Over the past year, it's been up a little bit plus. I'm sure you got a dividend in there, 2.12%. And then you purchased more Meta, because I think you had some anyway. That one's at 158. The last time I looked at the valuation for Meta, it was absurd and in a positive manner. So PE gap forward, non-gap forward, 1336. Gap is 1348. Your PEG ratio looking forward is under 1. I mean, it's kind of a textbook thing. The enterprise sales, I've never been huge on that just because there's a market cap version of it. I don't like to divide things by market cap myself. Price to sales under 5. Yeah. I mean, do we even need to look at the basics here? Meta and so many others are just feels like easy wins, certainly over 3 to 5 years. I was trying to see when Zuckerberg's coming on Mad Money. Let's see if we can find it. Mad Money. This is Wednesday, June 22nd at 6 p.m. So that'll be interesting, talking about the metaverse with Jim Cramer. And you know, if he's out there, he's definitely trying to drum up some interest for the stock, but good for him. I wonder how he'll be welcome on the platform. Lion also says, if supply chain is resolved and Vladdy Daddy pulls out of Ukraine, it's an easy rally. That I agree 100%. So I am not mega concerned about interest rates affecting the stock market. It doesn't feel like the ones that we've had. I mean, we've had choppiness during those announcements, but it hasn't been like a huge move to either side. I think it's all about oil prices and consumer inflation numbers. And as soon as those things turn around, which if you want to look on the bright side of the coin, could be not any day, let's be honest, but it could be as soon as, let's just say, post Labor Day, once the consumer is back indoors, going to school and stuff. And then I think more merchants have to look in the mirror and see if they can still charge the inflated prices. We'll have to see. One thing, too, what was I about to look at? I had something. I was reading about Amazon in terms of Prime Day. Let's see if I can find that article on here. Amazon. Amazon. So they were talking about Prime Day being a little bit different, different presentation this year, right? So instead of TVs and technology, they might be, let's see if we get any news here. They might be featuring different types of things. So you got Amazon devices, Fire TV, blah, blah, blah. This we're making it simple. I don't see anything on here. But some of the subscribe and save things, like if you sign up for paper towels, and get a thing of paper towels every week or whatever it is, some of those deals would come in to boost sales in a recessionary environment. We'll see how that goes. I still think the majority of people who go to Prime Day aren't really thinking about their grocery shopping, but if you are thinking about your grocery and household shopping, you may want to, if anything else, run low on some items that you keep stocked up in your house and see what they throw out there on July 12th and 13th. Makes a lot of sense too, especially, if you're just kind of hoarding things for no real reason. All right, Lion is Meta, Baba, PayPal, Apple, LMT, beautiful diversification. I like it. Apple continues to hang on, and it looks like it will continue to. I will say, we waited forever with NVIDIA, right? We said, NVIDIA, will it ever go down from the 200s? And it finally tipped over a little bit. Not that it's a bad company, but it was just overpriced. As far as Apple goes, I guess you lost, I guess it did finally take roughly 20% off. I don't want to say that. That's just quick math on a seemingly high price of 178, and now you're down to 140. But if we look at it from the valuation standpoint, PE, I think they run on GAAP actually. PE GAAP forward 22. So they're right in line with their 5-year average, is what it looks like here on Seeking Alpha. A little bit higher than the sector median. I was thinking that Apple was still a little high, like closer to the 30s, but I take it all back now at 136. If we just eyeball price to sales, I know that's not the Apple thing to do, but they're right in their 5-year average, 5.58 to 4.91. PEG ratio looking forward is definitely seemingly high, but it's right in line with 5-year average. So depending on your take on Apple and where it goes from here, I take back everything that I was about to say, which is it's still a little overpriced, but I'm not seeing that. I'm not seeing it now that I put the numbers up. Let's take a look at an annual chart. September 2022 is the end of fiscal year, $6.14. If they hit that, they'll be plus 10% for the year, for PE of 22. Revenue-wise, still positive, at least in current projections, 7.68%, and right in line with price to sales. And of course, with Apple, behind the scenes, the shares are disappearing a little bit every day with their huge stock buyback. So it's really hard. I don't actually have any Apple products. The rest of my family does. So I've never been like a huge Apple stock guy. I'm Google, Android, whatever. I don't have anything against them. But they're obviously deep into my QQQ parlays. So I'll be rooting for them, and it's actually good to see them perhaps at this level, arguably fairly valued in the current environment. Lion wants to buy Disney, but when you go woke, you go broke. This is probably true. Probably true. I hate when companies signal virtue and play politics. Yeah. How about Shopify splitting soon? I might have missed that. Let's see if I can get some news on it. Is this a rumor? Approve, yes. 10 for 1. So what is that? $34. Let's see when it happens. As they approve, new voting rights plan will enhance his power and a 10 for 1 stock split. It doesn't say when the split will happen. That's interesting. They've come down so much that, the stock splits, as you guys know, don't really do anything for the inherent value, but it could change. The thing that you look for is how much could it potentially change options action now that the price is cheaper. I don't know that we really saw it with Amazon, which is a huge stock that I would have probably figured would see more from that. But let's see, I don't know the date of Amazon's stock split, but let's just pretend it's, yeah. I mean, there's a little up here. I don't know when they started. I don't have it on tap, but anyway. 10 for 1 seems profound. Kevin Hawthorne, good to see you. Yeah, so stock split, I mean, it's a PR game to some degree. I don't know how effective it is right now. Shopify, though, man, I was looking at their valuation the other day, and it's still not necessarily like super exciting despite the price. So $344. They're not gap profitable. Wait before I say that. All right, only trailing 12 months. Seeking Alpha doesn't have a forward PE gap for them, so let's just go non-gap. 344, sector median of 17, 5-year average of 751. So, if you're not in this one, in the current environment, it is sort of hard to get super excited about 344, at least it is for me. If you're going to play price to sales, 7 times price to sales, it looks like 5-year average is 30. Last year they were 8.5, so this has only come down a drop, and it's roughly more than double the sector average. So I don't know. And then you get into price to cash flow. If that's your metric, whether it's trailing 12 months or forward, it's not a super shiny story, certainly compared to the sector average. Now this is information technology where they sit, but I think that's fair. So I don't know. I'm not in Shopify. They're in the Qs, no, they're not. They're not even in the Qs. They're NYSE. But it does seem like it could have a little more to go down. However, it's also very popular. So if you did I'll buy it for 2 or 3 years, okay? Well, by 2024, if they hit $5, then your forward PE would be 65. So that's exactly how long it's going to take under current projections. December 2024, they hit 10 billion. Now your price to sales coming down into, okay territory in the 4s. But just be careful with Shopify because there's so much support has dropped from this one. And then, they're also fighting what every other e-commerce stock is fighting, aka Etsy, Wayfair, whatever, which is the new competition from in-store. So, I think we all like the online experience. It's good for very many things, but everybody's getting out. So they're just going to Target, going to Costco, and buying things they might have otherwise ordered online in the past. Something to keep in mind. Marcelo, good to see you. Is Kathy Woods here? I lost my life savings because of Kathy Wood. That's going to be interesting to see where that is 6 months from now. I don't even know what to say. And I have regular Ark in my retirement fund. Thank God it's like 10 or 15%. But I'm just letting it ride. It's not even worth selling it. It's so far down, it's not even worth selling. You know, now you're down to $44, $50, which is, you know, arguably comparable to give or take 2018, 2019. And that's, you know, at a time when the market's super low. So where does it go from here? I don't know. But I will say, not to defend Cathie Wood specifically, but the one beauty of the Ark Fund, if you've been decimated or you're considering buying at the so-called bottom dip, whatever, is it's a managed fund. So she can buy whatever she wants, whenever she wants. So there is a chance that if there was, you know, let's just call it a U-shaped recovery with an elongated base, she only has to hit a couple names whenever the stock market goes back up, even if that takes 2 or 3 years. And if she hits those, you'd be back in it. So that's one reason, at least in my SEP IRA, I'm just letting it, I'm not buying it anymore, I'm just letting it hang. I can always, you know, revisit that down the road. But managed fund does not have to follow the same rules as like a spider index fund or something like that. So that's the one nice part. Will I buy Enphase? I still think that solar stocks are really high. Okay, I'm still surprised that Enphase is where it is. When it got to 120, which it's done basically a couple times, then it was starting to get interesting. But from a sheer valuation standpoint, they're still so far above everybody else, right? So even non-GAAP forward 55, sector median 17, they got them in information technology. Let's do something different here. Here in Seeking Alpha. By the way, you can check the description for a coupon and free trial of Seeking Alpha through my affiliate link. So we got Enphase, Solar Edge, which is another one I would consider. And these other guys, I don't know all of them, so I'm just going to let them go. You got Wall Street Buy, Author Hold, Quant Formula Hold. Let's get down to the brass tacks. Screw all this stuff. Let's get down to valuation. All right, so P non-GAAP fiscal year 1, 55, Solar Edge is 41. Solar Edge has significantly, I want to say they have significantly more earnings per share. We'll find out in a minute. Now, if you go to GAAP forward, although I should be fair, Enphase does everything non-GAAP, and it looks like so does Solar Edge. But you do have to get into year 3 to get into the 30s, 20s for Solar Edge before you would say in this market, right? In this market, 30s feels a little bit better. Where's our PEG ratio? I mean, at least it's in the 1s. That's the good news. Price to sales, forward 12x versus 5x. And if we did cash flow, looks like Solar Edge it's either a miscalculation or they're in worse shape than we all thought, but 68 to 579. Where is our EPS? Somewhere in here. Profit margin, revenue per employee. I have to find it. These profit margins are 39% to 30%. EBITDA, I mean, there's everything on here does favor Enphase versus Solar Edge. Ownership, performance, risk. I can't believe that these stocks are not shorted more. I will say that. I want to just see our earnings, but it's all this total return. Shucks. Well, earnings. Let's just do it for these guys, and then we'll go look at SolarEdge. All right, EPS estimate this year, $3.47. Puts you at 55. Next year, if they get to 436, it's 44.38. Keep in mind that one change in any sort of solar government support just screws everything up in the industry. And so that's another thing that's a little scary. Let's see our revenue growth. Still projected plus 50%, plus 31% next year. Let's take a look at SolarEdge, kind of eyeball how that would compare. We need an annual. All right, so yes, EPS for SolarEdge, granted the stock's more expensive, but it's about double. So 676, 40% growth. Then next year, I think that this is a higher number than what than Enphase projected, and your PE into next year, the forward PE there goes to minus 30, or excuse me, under 30, and that's pretty much the number at the end of the year. Now, price to sales, 3.84 billion, 4.08. So, you know, just on EPS and revenue, I'd still be inclined to go SolarEdge right now. Certainly cheaper on the multiples, but I don't want any of this right now in this particular environment. Not because it can't go up from here, but it just feels like, you know, what does a recession do to the sale of solar energy? I don't know. You got to figure like there's a decent chunk of people who would buy a solar roof last year who are out of the market now for financial reasons. Guess we won't find out until these earnings continue to go in. Here's a funny one, and this is just an individual opinion. Sell before the dominoes fall. All right, does Block, former Square, hit the bottom? It's near the bottom, but as long as Bitcoin is falling, they have more to go because they changed their whole company to Block and blockchain. So I shouldn't say Bitcoin specifically, but as far as crypto goes down, I say Block will follow suit to some degree. Tech is undervalued, drops by 80% in sales. Okay. Kathy needs to make an OnlyFans. Wow, that hurts. Kathy Wood in their 5-year time horizon, more like buy high, sell low. A lot of tomatoes being thrown here. The economy is falling quicker than Biden falling off his bicycle. Biden's in the hot seat, man. I'll tell you that. Like, I don't really follow like approval ratings, but let's just take a look. President, if I can spell it. Approval rating. I don't know. You guys are just going to have to bear with me. I'm just going to assume that this, as the first Google result, that it is a meaningful one. Well, there's your big cross. So approve in the black and disapprove in the red. And the separation is widening, certainly for sure. And that looks like we hit a crossroads in August, and things got worse from there. So we'll see where they go from this point on. I don't know. These might be the sources of the approval ratings. I have no idea, so I'm not going to pretend to know. But needless to say, this isn't good. We'll have to see where it ends up. I've read somewhere that markets rally bigly from midterms. I've read that too. And I'm guessing with the way this thing's going that Republicans should fare well in the midterms. This is basic math, just looking at a chart like this. And then you have to wonder what that does to everything and to some of the policies that are out there, whether they're solar policies, oil producing policies, whatever. It could be very, very interesting. Bring back mean tweets. Okay. Biden sanctions are hurting us more than Russia. This is probably true because we do not rely much on Russia for anything. So anyway, but all right, guys, I just came in to say hi, and we got into presidential approval ratings and solar stocks. I don't know. Let me know what you think. Let's check the market before we go. Maybe. NASDAQ down since I got on slightly from 0.75 to 0.63. Got gold up a little. Crude oil went down just a hair since we've been on. S&P, same thing. So we'll just have to see how it goes. I think we do have some more time, though, to buy these, buy the sales, right? Buy these stocks on sale. And I think we've all come to that realization. There's no way that PayPal's going from $70 to $110 tomorrow. It's just not going to happen. And it's probably not going to happen, maybe by the end of this year. It's probably not going to happen. But these things like PayPal will get back on track. And so we have to do our best to pick off little pieces here and there. And if you're in energy and made a lot of money, you definitely have to have your finger on the trigger to take profits and buy low somewhere else. Probably have time on that too, but keep it in mind. All right, guys, hope everybody's doing well. We'll see you on the next one.